Hi, this is Tammy Campbell with Impakt Realty Group, brokered by Keller Realty West. And today I'd like to talk a little bit about renting versus buying. We've talked a little bit about all the multifamily apartments growing all over our county, and they're luxury apartments. So a luxury apartment is about 952 square feet, $2,200 a month, 2 bedroom, 2 bath, no garage. But that's okay because there are other benefits that they are offering you. However, let's talk about paying that $2,200 over a 3-year period and how much cash that might cost you. Well, first of all, to get into the apartment, you're going to need your first month rent, your last month rent, and a deposit. At $2,200 a piece, you're looking at $6,600. That's going to have to be paid out up front. Then, let's say you want to stay there longer than a year. You're going to face a rent increase. Now, historically, or let's say in the last 5 years, they've probably been 5 to 7%, but just to keep a conservative conversation going, I figured about 3%. And that means your first year at $2,200 is going to have a 3% increase, and that 3% increase is going to have a 3% increase. So I just took a time period over 3 years, came up with $81,600. That sounds like a lot of money. It does to me. So what could you have done with that money if you wanted to buy a house? So in this example, we're using a $200,000 home with 3.5% down. That's $7,000. Pretty close to that $6,600 that you needed to get into that luxury apartment. Now, let's look at your house payment. At 5.5%, at $193,000 is what your loan is going to be. Your principal and interest only is going to run you about $1,100. Of course, there's going to be some extra things that you'll pay in there, like insurance and taxes that go into a monthly payment too. But just to keep the value of ownership comparable to the rental, I didn't include that for this example. However, if you're coming out of your pocket to pay your interest and your principal, $1,095 over 3 years, your total out of pocket is going to be about $40,000. Now let's also look at what happens to the value of that house over 3 years. So over 3 years, that house is going to increase in value, known as appreciation. I also use the same conservative 3% just to not make anything too unbalanced to seem unreal. And then we've got now a house value that you have of around $218,000. At the same time, you only owe about $187,000 on that home. In that time, that means you have gained $21,000 in equity that you own. Your address, your ownership, you have $21,000 equity in your home. And that's why it's so valuable to own a home. So you can kind of see the value of owning something versus the value of renting something. Paying $81,000 out of your pocket over 3 years for someone else to own a piece of property, or paying the $40,000 out of your pocket towards your interest and principal so that you own something and you gain wealth, and that does pour into your personal wealth. So if you would like more information about how to really evaluate buying versus renting, I would love to have a conversation with you, run some numbers with you, and see what makes sense for your personal situation. My name is Tammy Campbell with Impakt Realty Group, part of Keller Realty West. I would love to have a conversation with you. Give me a call today.